It's 6 in the morning and Ryan is already awake. Two monitors glowing in a dark room, coffee going cold beside the keyboard, one hand on the mouse, hunting for the trade that's going to change his life. Across town, Sam is asleep and Sam is the one who's going to win. Here's the strange part. Ryan is about to work harder at building wealth than almost anyone you know. He'll learn every candlestick pattern, memorize every indicator, pour thousands of hours into those two screens, and the math is quietly betting against him the whole time. Sam, who's going to do almost nothing, is the favorite. My name is Nick, and I've spent an unreasonable amount of time watching people confuse being busy with getting ahead. So if you've ever wondered whether day trading is a real path to wealth or just an elaborate way to donate money to strangers, stick around because today we're running the full numbers on both and the gap at the finish line is going to surprise you. Let's keep this honest because these comparisons are usually rigged. Ryan and Sam are both 28. They both make $55,000 a year. They both have $30,000 saved. Same city, same rent, same starting line. The only thing that's different is what they do with that 30 grand, and more importantly, what they do with their evenings. Ryan reads that day trading is how ordinary people escape the 9 to 5. So he takes his $30,000, buys a $1,500 course, sets up two monitors, and starts trading before work, during his lunch break, and late into the night. Sam reads that almost nobody beats the market, shrugs, and drops his $30,000 into a total market index fund. He sets up an automatic $200 deposit every month and basically forgets the account exists. On day one, these two lives could not look more different. Ryan has a setup, charts glowing on two screens, a watch list, a journal, and a Discord server full of guys with rocket emojis in their usernames. When his friends ask what he's up to, he gets to say the words "I trade." People lean in. It sounds like a skill. And every time he closes a trade in the green, the app throws a little burst of confetti across the screen and something in his brain lights up like a slot machine paying out. That feeling is the real product. Sam has a confirmation email. That's it. When his friends ask what he's investing in, he says an index fund and watches their eyes glaze over. Nobody's impressed. There is no rocket emoji for "I bought the whole market and went to bed." Here's the trap this entire video is built around. Ryan's path feels like winning. Sam's path feels like giving up. But feelings and math are two completely different animals. One of these guys is generating activity, the other is generating progress. And your brain is wired to confuse the two because activity is loud and progress is silent. The market doesn't pay you for effort, it pays you for edge, and it charges rent on activity. Keep that in your back pocket because we're about to watch both bills come due. So let's start the clock. Year 1. And I have to be fair because year 1 is where Ryan's story looks incredible. He hits a hot streak. A few tech names run, he catches them, and by spring his $30,000 is up to 38, maybe 40,000. He's beating Sam. He's beating the market. He screenshots a green day, posts it in the group chat, and for a few glorious months, he's living proof that everyone who doubted him was wrong. Meanwhile, Sam's account has crept from 30,000 to about 35, mostly from the market drifting up and his deposits stacking. It's boring, it's slow, and right here, if you froze the tape, you'd swear Ryan made the smarter choice. So remember this moment, because this is the peak. This is the highest Ryan's story ever gets. He just has no way of knowing that yet. To him, it feels like the beginning. This is the part the course sellers screenshot, the Lamborghini in the driveway, the "I quit my job at 28 thumbnail, and it's real for a while. But a coin that lands heads 5 times in a row feels like skill too. It isn't. The traders who win early are actually in the most danger, because the market just taught them the wrong lesson at the worst possible time. By year 3, the coin starts landing tails. The hot streak reverted the way hot streaks do, and Ryan had a brutal stretch where he tried to win back a loss and made it worse. Traders call it revenge trading, and it works about as well as it sounds. There was one Tuesday in March he still thinks about. He was down $400 by lunch, so he doubled his position to win it back fast. Then sat there and watched the thing fall straight through the floor, his hand frozen on the mouse, telling himself out loud that it would bounce. It did not bounce. That one afternoon cost him $1,100 and a week of sleep, and the worst part wasn't the money. It was that he knew the whole time he was breaking his own rules and did it anyway.